Good morning, everyone. It is Monday, December 22nd, 2025. We are kicking off the holiday trading week with a market landscape that is anything but quiet. If you thought this Santa Claus rally was a guarantee, the last 24 hours have thrown us some massive curveballs. From a historic rate hike in Japan to a major policy shift from the Trump administration regarding AI chips, we have a packed show. We're going to break down the closing levels from the weekend sessions, the macro data that just dropped, and the geopolitical shockwaves impacting your portfolio right now. Let's dive straight into the numbers. Let's look at where the major indices stand as of this morning. The US markets are coming off a volatile week, but we are seeing resilience in tech. S&P 500, currently hovering around 6,860, up about 0.88% in the last session. The index is holding strong despite the macro headwinds, largely driven by a rotation back into select tech names. Nasdaq 100. The tech-heavy index is outperforming, sitting near 25,490, gaining 1.31%. We're seeing a decisive bounce here after testing support levels earlier in the month. Dow Jones Industrial Average. The Dow is lagging slightly, trading around 48,225, up 0.38%. It's facing pressure from the energy sector, which we'll discuss in a moment. The VIX. Volatility has cooled slightly, but remains elevated at 15.26. Over in Asia, the story is dominated by Tokyo. Nikkei 225. Despite the currency volatility we're seeing, the Nikkei has managed a rally, trading up 1.76% to 50,378. This is a critical psychological break above the 50,000 level, defying the usual strong yen headwinds. India's Nifty 50 closed the week at 25,966. It's forming a base here, but traders are cautious as it hovers just below the psychological 26,000 barrier. The biggest macro story of the last 24 hours comes from the Bank of Japan, in a move that has rattled global bond markets. The BOJ has raised interest rates to 0.75%. Now, that might sound low compared to the Fed, but this is the highest policy rate Japan has seen in 30 years. Here is the twist. Markets expected the hike, but they didn't expect the reaction. Usually, a rate hike strengthens the currency. However, the Japanese yen has actually weakened, with the US dollar to Japanese yen pair rising to around 157.75. Why? Because the BOJ's guidance was incredibly vague. They raised rates but refused to commit to further tightening, leaving traders confused about the future path. This dovish hike has triggered a sell-off in the yen, which ironically provided a tailwind for Japanese exporters this morning, fueling that Nikkei rally we just mentioned. Kazuo Ueda, governor of the Bank of Japan, has taken a cautious stance, disappointing markets that expected a clearer stance on narrowing the neutral rate range and future rate hike path. Turning to the United States, the macro picture for late 2025 is getting complicated. We have fresh data points that you need to watch. Unemployment. The U.S. unemployment rate has ticked up to 4.6%. This is a clear signal that the labor market is cooling faster than the Fed anticipated. Inflation. On the flip side, inflation has fallen to 2.7%. This divergence is the main driver of market anxiety right now. Lower inflation is great, but a rising unemployment rate to 4.6% brings recession fears back on the table. The Federal Reserve is now caught in a bind. Do they cut rates aggressively to save jobs or stay cautious? Currently, the GDP growth for Q3 came in at 3.8%, but forecast for Q4 is softening. We are waiting on the durable goods orders report due later tomorrow, which will be the final puzzle piece for the year-end economic outlook. The geopolitical landscape in late 2025 remains incredibly fragile, and it's wreaking havoc on the energy markets. First, let's talk oil. WTI crude has been extremely volatile, dipping below $55 per barrel, levels we haven't seen since 2021, before recovering slightly to the $57 range. Why the drop? Despite high tensions in the Middle East, the market is overwhelmed by oversupply and bearish demand fundamentals. The technical trend lower in WTI crude oil has been dominant. However, the geopolitical risk premium is still real. We are seeing continued aftershocks from the 12-day conflict between Israel and Iran back in June. While active major combat has paused, the regional balance has shifted. Reports this morning indicate that Syria is undergoing a chaotic transition following the collapse of the Assad regime, creating a power vacuum that global powers are scrambling to fill. A year after the fall of Assad, the humanitarian crisis persists, with a damaged healthcare system and millions still vulnerable. Additionally, Egypt is facing renewed pressure on its southern border with the ongoing crisis in Sudan. These red lines in the region are being tested daily, and any flare-up could send oil ripping back higher in a heartbeat. Egypt has warned that any move threatening Sudan's unity, state institutions, or territorial integrity would cross Egyptian red lines and directly endanger its national security. Now, for the political news that is moving markets immediately. We have a major update from the Trump administration. In a controversial move that prioritizes market dominance over strict containment, President Trump has approved the sale of Nvidia's H200 AI chips to China. This is a massive pivot. For the last 2 years, the narrative has been total ban. But reports suggest the president sided with advisors who argued that expanding U.S. market share is more critical than a total blockade. Impact: Nvidia and semiconductor stocks are likely to see heavy volume today. This reopens a multi-billion-dollar revenue stream that many analysts had written off. However, this has spiked tensions with Japan. Japanese Prime Minister Sanae Takaichi, who is known for her hawkish stance, has previously criticized looser controls on tech transfers to Beijing. We are watching for a formal response from Tokyo later today. Let's switch gears to crypto. It has been a roller coaster weekend. Bitcoin is currently trading in the $88,000 to $89,000 range. We are seeing a bit of a recovery after a sharp sell-off earlier in the week that flushed out over-leveraged long positions. Ethereum is holding just above $3,000. Solana, trading around $126. The big story here isn't just the price action, it's the flows. New data confirms that Bitcoin ETP inflows have officially surpassed gold inflows for the year 2025. This is a historic flippening of institutional interest. Despite the recent price dip, the structural demand remains massive. However, be careful of volatility. We saw nearly $500 million in liquidations last week. The market is hunting liquidity, so expect choppy action around this $88,000 level before we pick a direction for the new year. Before we close, a warning on individual stock picking. Look at Oracle. The stock has been hammered, trading down near $177. That is a massive 49% decline from its September peak. Why? The news broke over the weekend that their partner, Blue Owl Capital, is pulling out of financing a $10 billion data center in Michigan. Even though Oracle says they will proceed alone, the market doesn't believe their balance sheet can handle it without strain. This is a reminder that in this high-rate environment, capital financing risks are deadly for growth stocks. Investors are jittery about Oracle's ability to translate commitments into real revenue sufficient to justify the debt that the company is taking on to fuel its AI ambitions. So what is the trade for today, Monday, December 22nd? Watch the yen. If US dollar to Japanese yen keeps rising, look for Japanese equities to continue their run, but be wary of the currency destabilizing. Tech rotation. With the Trump/Nvidia news, expect the semiconductor sector to lead the Nasdaq. Stay alert on oil. $55 is a key support. If it breaks, we could see a deflationary signal that hurts energy stocks further. We will be back later today with the closing bell update and a look at those durable goods numbers. If you found this report helpful, hit that like button and subscribe so you don't miss a beat in these volatile 2025 markets. I'm your name, and this is your Monday Market Report. Let's get to work.